I think the main thing is, and this is advice we give to everyone we speak to really, before you even think about fundraising, you need to have some familiarity with the market. You need to understand
True.
who some comparable companies, what have they raised? If you can find the terms, that's always useful. Get an idea for the kind of valuations a comparable company might achieve. And is that within your expectations? Is it near your expectations? If so, good. If not, you may need to really think about it. A lot of companies, for example, will approach VCs or angels looking for investment, and they're not even really like a venture backable company. And that's a big problem for VCs. They want, billion-dollar outcomes, if not multi-billion-dollar outcomes. And if your company isn't on that path, you're wasting your time, frankly. So that's, there's a lot of questions to be asked before you even get into kind of specifics of valuation. Once you are in a negotiation and you're talking to an investor, and if they really push back and they say, we think your valuation's way too high, first you have to understand that's their incentive. They want more ownership, so they are often going to do that. If you have competing, if you're talking to multiple investors and you can get some competing bids, of course, that's always helpful. Get a bit more of a range. But really, it's going to come down to having a solid objective view of the company and of the market, combining those two, and then you should get a fair outcome.